Now, this is a landlord nightmare. I'm not here to sugarcoat anything over here, but if you're someone who is a landlord in Canada, then you need to hear this. You need to know what is happening. So, I'm here today to present you with the raw data from the rental.ca rent report. So, let's check out what is happening in Canada. And if you're someone who is a landlord, it is a must watch video for you. And also, if you're someone who's planning to get an investment property and make it into a rental, do check out this video. So let's jump into the topic. The very first one in this one is the asking rent in Canada averaged at 2,121. Now, this is a 3.6% year over year decline, which as a landlord, not many people want to hear this one. And if you see, the concerning thing in this one is that this is marking as a 10th consecutive month of declining rent. So basically, for the last 10 months, rent is declining at a steady pace, which is not good because at the same time, all the other services, all the other contractors are getting more and more expensive. And again, you know what is happening with inflation. Again, the data might have come down, but the real actual inflation, we all feel that. Now, this is a chart from July of 2019 to July of 2022. So, this is from July to July. Now, what happened in July of 2019? The average asking rent was roughly about $1,800. Right now, it's 2,121. We know that compared to last year, basically 2,200, it's declining at a steady pace. Now, as an investor, as a landlord, most of the time people think your biggest competition is the next landlord or the next investors. But I would highly disagree with that. Your biggest competition right now as a landlord are the purpose-built rentals, the institution which have a big capital to make this kind of purpose-built rentals. And if you see over here, purpose-built rents up 23% in the last 3 years. So let's check out the data over here. This is something like changes in average asking rents by a property type. So purpose-built rental, it is up by 23% if we consider. So this is 2025, 2024, and this is 2023. So from 2023 to 2025, it's 23% up. At the same time, if we consider a condo rental, it is only 0.3%. So it's nothing like it's pretty flat, it's pretty stable if you're someone who's considering for past 3 years. Again, it has come down from negative 5.7% to positive 0.3. But again, in terms of growth, it's gradually going, but no real growth data over here. And if you're a landlord, whoever house or townhouse, which by the way, this did happen back in 2022, I would say 2021 to 2023, where many people buy a bigger houses with more amount of bedrooms in that, thinking that they might rent this out to students who's coming to Canada. And right now we know what is happening with the student population. Again, it's not completely dead, but it has gone down significantly due to so many issues going around in that community. So if you're someone who is having a house or a townhouse as a rental, it's still negative. I don't have any good news for you. And this shows like 1, 2, and 3 year change. Now, this is a very important metric you need to understand. It says change in average asking rent by unit type. Now, it's a studio, one bed, two bed, and three bed. Now, when you are investing, you might have thought about investing into a studio, one bed, two bed, or a three bed. Now, based on this kind of metric, you can understand like what is happening in that particular niche. If you see studio rentals, these are up by 19.7% in a 3 year change, which I am assuming like most of the one bedroom rental are pretty small. Like you see box condos coming up in Toronto, which is like one bedroom, even it is like 400 or 450 square feet, whereas studio it's 300 square feet. So again, it's not that much of a square feet. Again, when you go down based on the layout and everything, it might differ a little bit, but many people, due to inflation, due to price gap, due to what is happening in the economy, choosing studio over one bedroom. So that's why we see a studio demand over here. And this is again in the rental market, not when you are planning to sell, because that is totally completely different store. The studio rental based on rental.c is 19.7% higher. One bed is 13.9%. Two bed is 14.3%, and a three bed is the lowest at 12%. And this is a 3 year change. Now, this is the very first page over here. It says what is happening across all the major cities in Canada. So, if you see over here, Vancouver is negative 9%, and this is year over change. So, Basically, compared to last July of 2024 to this July of 2025, it's a 9% negative. Toronto is 4.7% negative. Halifax is 4.6%. And over here, like Calgary is at the highest, that is an 11.6%. Many people, many investors from Vancouver and Toronto moving down to Calgary for an investment property. But again, the numbers are not math is not matching in this one. Numbers are not matching in this one. And still, good amount of return in Calgary compared to major metros over here. But yeah, right now it's at 11.6% negative. Winnipeg, negative 1%. Edmonton, negative 2. And Regina is at 2.2%. And if you want to go a little bit down towards what is happening into city to city, so this is something that's very important. As a landlord, you should check out this every month to get an idea. So this is not when poor, and it bifurcate by one bad month on month and year over year as well with the two bad as well. So it gives you a very good data. Now again, I want to put a disclaimer over here. This is all data that is extracted from a registered website. So if you're seeing on Facebook Marketplace or Kijiji and things like that, what I would estimate is whatever trend you're seeing over here, the real number will be lower than that because it's not represent Kijiji or Facebook Marketplace, and most of the time you may be able to find lower rent compared to what is listed on MLS. Again, this is a municipal overview, like average rent in Canada, apartments and condo year over year, Vancouver, Toronto, Mississauga. You can see all the cities down there and compare what is happening in your city, so you get a better idea and you can adjust accordingly. Now, here's the good news for investors who are looking to get on the Edmonton side. So, if you see over here, since 2022, Edmonton rents have increased 27%, while Vancouver rent declined 6%. So, of course, the secondary market, by no means, Edmonton is a secondary market. It's a huge city, big city. But in terms of price comparison, where you see whatever is available in Vancouver and Toronto, most of the time in Edmonton, you can get it at half the price or little lower than half of the price as well. At the same time, you are having a good amount of return in terms of rent. Now there are two main component of in it. When the investor is investing into a property, the very first one is the cash flow, which you can determine based on the rent number over here. The second one is appreciation. But for the last 3 to 4 years, we have seen appreciation is not that good in this kind of cities over here. Again, it's stable and it came up a little bit compared to what we have seen, but appreciation was not the only factor you should consider in this kind of situation. And over here, it says the graph of average asking rent for largest six Canada markets. So it has a Vancouver, Toronto, Ottawa, Montreal, Calgary, and Edmonton over here. And you can see all the different lines over here. So that is everything from today. If you like this video, if you like this kind of content, hit like and subscribe button. I will see you in the next video. And as a realtor or as a landlord, rental.ca, it's a very good thing to check it out. I always see this report like twice a month. So you at least know what is happening in the Canada. And also as a landlord, you know how you can adjust what is happening if your lease is coming up for a renewal, what you can expect at that point of time. Thank you so much for watching. I will see you on the next one.